I now hand the conference over to Mr. Hiren Shah, Head Investor Relations, Bandhan Bank Limited. Thank you, and over to you, sir.
Thank you, Margaret. Good evening, everyone, and thanks for joining this conference call. We are glad to welcome you all to discuss Bandhan Bank's business and financial performance for the quarter ending September 2020. We will take this opportunity to update you on the recent developments in the industry and Bandhan Bank during this quarter. To discuss all this in detail, I've got with me our founder, managing director and CEO, Mr. Chandrasekhar Ghosh, our housing finance head, Mr. Sudhin Choksi, our chief financial officer, Mr. Sunil Samdani, and myself, Hiren Shah, head of investor relations. Now, I'd like to request our founder, MD and CEO, Mr. Chandrasekhar Ghosh, to brief you all about the bank's performance and development during the quarter. Over to you, sir.
Good afternoon. Welcome to all of you. This is in quarter 2 financial year 2021 result. We published in that today. It's my pleasure to talk to all of you in the time of COVID. We know that the lockdown has come very easy and economic activities improved significantly. The rural economy is on a much stronger and footing, reflecting good monsoon, record kharif showing, several government initiatives, and the puja also going well. A number of our customers who are typically small entrepreneurs that depend only on local supply chain and cater to demands for essential goods and services, and they are bounced back strongly in this quarter. Result shows that. Within this situation, bank performed very strong growth, which I like to mention in here. Disbursement post-moratorium, we are close to pre-COVID level. Advance growth has come 19.5% year-on-year. Gross NPA has come down 1.20% from last year the same quarter 1.8%. And if we say that the net NPA 0.36% compared to the last year the same quarter 0.6%. And all are happening the team performance of the collection efficiency. And team performance collection efficiency month-on-month basis, we saw that the improvement has come. And we are earlier mentioned about it on that June collection efficiency and the now September collection efficiency. September overall bank collection efficiency has come 92% in the overall bank, which was 76% was in a June quarter. And out of this 92% in the collection efficiency, 89% by micro banking, which is called the new name, emerging entrepreneur business vertical. And if I see that there is a September, the quarter is this, the 89%, but in October month closing, we find out on that the collection efficiency in micro banking has come 91%. Very good thing which we learned last 20 years, microcredit borrowers, that normally they are very disciplined based and they are also running their business and they are coming, they are build up their behavior to repay. Sometimes it will be like to disturb, but again they have been taken some time and return back on that. And this time also they are showing very good. Sorry. In October, the 95% of the microcredit customers started the repaying, which is showing very good future. Next, we feel that within the 90 days, the normal of the collection efficiency will come near to before COVID situation. And we saw also that the deposit growth in the bank, 95%, deposit growth in the bank. There is a 56% of the CASA growth in this quarter we have been seeing, which is the best quarter in the last the couple of quarters we have been seeing. And our CASA ratio 38.2% of the total deposit. This as a result in best ever quarterly profit before the tax, rupees 1,233 crores. Profit after tax 920 crores, which is 67.3% quarter-on-quarter growth. And profit, whatever has come 920 crores, after taking additional COVID provision 300 crores. Now total the provision 2,069 crores in the bank. Banking is the focusing to expand more network with building human capital and the technology initiative. We have the plan on that this financial year by March 21 will be opened 574 new banking outlets across the country, and this outlet is in major is coming from south, north, and west, and not in a east and northeast. Because of the growth, strategically will continue focusing in the area of EEB, which is our new name of microcredit, called that the emerging entrepreneur business, housing vertical, commercial banking vertical, and newly we have been developed retail loan vertical along with the deposit, the growth. We are focusing because we are focusing from this the result, how we can be more grow in the bank in the future. I already mentioned about it, 574, the banking outlet will be opened by March 21. I also again mentioned on that our another focus vertical, which is in housing loan, will be expand in this year, another 500 banking outlet. The group of housing loan will be expand on that. Sorry. Earlier I also mentioned in a different the forum. I like to address in here also. The first 5 years of the bank was the build up of the base, build up the team, and merger of the team, and together working on that. And suddenly we faced that the COVID, and COVID also 2 quarters we are covered. We find out on that how the trend of the customer in the business on that. That have been very positive feelings we got on that. Then we have been taken a new 5-year focus plan. The first the plan on that, we have the EEB, Emerging Entrepreneur Business, which we feel that within a 5 years, our ratio of this business will come 30%. We know that this is the vertical where the group loan is there, individual loan also is there. We have developed the individual loan product. Under this, the promote from the group loan to the individual name is a Samriddhi and the micro housing loan. And we are developing on that model such a way how this all of the 3,500 microcredit branches gradually will be focused on that all the products and services which is needed in the low income group and middle income group, including deposit and their the housing loan, their gold loan, their consumer loan, all will be provided the centering with this of the microcredit branches, and that will be help us to grow the different types of the portfolio in the bank. And the second vertical is in housing loan. That also we are looking in that within a 5 years it will become to the ratio the total advances is at 30%. And we are dividing on that the two types of housing loan. One type of is a micro housing loan, another is a prime housing loan, which is affordable housing, we called it on that. And we will like to gradually increase the number of branches. Where the branch customer is there, they will get the housing loan service facilities from us. And other than the branch, also from the market, we will be like to attract the customers to provide this housing loan. And the third point, that we have the commercial banking, which we also feel that the 30% will be like to issue in the next 5 years. And they are also promoting existing customers from microcredit, as they called the individual loan, which will become to here as a MSME. And also will be like to source from the market, and will be keeping our mind on that. Will be not go to the corporate lending in the bank. And the fourth vertical we have been developing called the retail loan, which is, we feel that the retail loan means the personal loan, two-wheeler loan, gold loan, and vehicle loan, and consumer loan. And these all loans will be like to provide through the bank branches. Wherever we have the 1,071 bank branches, this vertical will be work under through the bank branches to provide this type of product. And this product altogether within 5 years, the 10% of the total advances we can be like to reach. And we are, that we are recruited in the good head of this loan, and the building a collection vertical separately to support this business. And also we are developing on that using technology in source and assessing this customer level. So this is a good vertical, and we also saw that there is a good demand from the customer level, existing and new customer level, which can be helped to the bank to grow focus of the advance book. Other than this, of course, we like to mention on that we will be continuously building the human capital to provide the best services to our customers, and technology will be like to develop gradually, time to time, whenever needed on that. And the digital channel we are focusing in this. From this year, we are recruited one of the senior most persons focusing on that. How the bank also simultaneously with the present model, how we can be also provide the digital based in the product and services of the banking industry to the customer. So these are the 5 year plan also we are placed to you. So we feel that India is a big country. Focusing to the rural is until now is a very small number of opportunities already taken by the banking industry. There's a big opportunities in future. As a Bandhan is like to focus and grow the book size in the balance sheet, the liabilities and the assets pan-India basis, not India concentrated with only the Eastern region. So I like to help all of you support on that to grow this in a perfect way. Thank you to all of you. I hope that you have some question will be like to share on that thought.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone who would like to ask a question, you may press star and 1 at this time. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Antariksh Banerjee from ICICI Prudential AMC. Please go ahead.
Hello, good evening. Can you hear me?
Yes.
Yes.
Yeah. Hello, sir. So I have three questions. First is, in the microfinance business, if I look at your average SA deposit balance of the microfinance customers, while the deposit in the normal retail function has been excellent, this deposit balance of the microfinance customers is consistently coming down over the last 2-3 quarters. It was around 2100 2 quarters back, then it came to 1900, now it is 1600. Now in the overall deposit mix, it is very small, but if you calculate this as a percentage of the repayments these borrowers are making monthly or quarterly, this is a fairly large number. So any idea why this deposit balance is consistently coming down?
Okay. If you see that this is a time is very much not in a normal situation on that. So in that time, we cannot be like to mobilize the deposit in this time. So they have a need, they can be withdraw. Then confidence of the customer will be like to build up more. So in that sense, we are feel that it is in good. It is not in a long term the views, but in the short term, this is a time they can withdraw, they can deposit. That have been happening on that.
Okay. So they are withdrawing money to make the payments for their loans. Is that a fair assessment to me? Some of the borrowers who are probably having some stress.
See, typically the way we collect these deposits is that along with the installments, they pay 30-50 rupees extra.
Correct.
So in this time, the focus is more on installment rather than extra amount for the deposit. So that's what we are saying.
Sure. Okay. And you have acquired some 3 lakh customers in the microfinance business. You are starting disbursements again. I just wanted to ask, what are the changes operationally or logistically because of COVID and social distancing that you need to follow now? I'm sure you cannot gather 20 people in a small room and conduct the meetings the way you were. So what are the changes that this business is undergoing operationally? It may be temporary, but you're starting to grow again, so it matters.
If you see that we are after the COVID situation, that the last quarter we have given the extra one staff to the every of the banking outlet, because we know that the normal position maybe the 20 or 25 borrowers can be come to the one group meeting. It will be not happened in this moment, so that they are split in a group on that. Some house maybe the 10 people or 5 people or 3 people. And that split it with they are going to collect on them.
Okay, but the meeting is happening. It's not like the center group leader collects everything on everyone's behalf and then gives it to the collection agent.
No, that is not in the normal. This position is not we are expected. We are not also insisting that.
Sure. Okay. That's helpful. And my last question is actually on the mortgage portfolio to Mr. Choksi. Sir, so it's been a while since this portfolio has been stagnant. Obviously, the segment itself has had its own issues. Now, I heard Mr. Ghosh in the opening comments talking about this portfolio now going on a growth path and becoming 1/3 of the book, say 5 years later. What's your medium-term outlook on this entire mortgage portfolio? Would you like to grow it the way you did it in GRU, where the mix would be some 85% housing and the 10-15% would be LAP and construction? I heard that you are splitting the book into normal affordable housing and microfinance. What could be the ROE profile? Would it mirror the way it was in GRU, or it is going to be a more modest profile? Any medium-term thoughts on how you're going to build this business here?
Yes, sure. If you look at it, micro housing would be undertaken by, the EEB vertical, okay? Because more closer to those customers, and therefore they would be handling the micro housing finance business there. As far as other housing finance vertical is concerned, we would continue to do affordable housing, what we have been doing. Besides, now that we would be using the bank branch network across the country, as Mr. Ghosh mentioned. Obviously, therefore, we will look beyond affordable housing segment. So I think average ticket loan, which has been so far, steadily at 9.5 lakh, I think there you will see an increase in the average ticket loan size. And obviously, our post-merger, our penetration and the contribution has started coming from the eastern states, West Bengal, Jharkhand, UP. So I think over a period of time, I think we should be able to see quite a good growth coming in the medium term. I cannot quantify the figure and tell you, but I think if you look at the existing network of 1,000 branches, and as Mr. Ghosh mentioned, I think if we are looking at 500 retail outlets, and there are many states where erstwhile GRU had not penetrated. So I see there is a huge potential possible to achieve the good growth over a period of next 5-year period as vision articulated by Mr. Ghosh.
Sure. And so what would that imply for your profitability or return profile? Because you're going into prime segment, I'm assuming the ROE will be lower because of the competition. So as an aspirational level on a blended basis, how are you looking at the return profile here?
I'm sure. I think there would be slightly yield, obviously, which we have sustained today on our portfolio of around close to 10.5 or 10.75%. That yield, the mix will change, I think yield will also accordingly change. Today, I am not in a position to tell you what portion of the prime housing would be component, but I think as we move forward and as we start sourcing, I think we will know better as to how much yield gets compromised. The desire is to sustain the yield.
And just to add, while the prime housing will come at a lower yield, we will also have a micro housing vertical which will come at a higher yield. So on the whole, we still hope to balance this.
Got it. Okay, that's helpful. Thank you so much. All the best.
Thank you.
Thank you. The next question is from the line of Karthik Chillappa from Buena Vista Fund Management. Please go ahead.
Yeah, thank you very much for the opportunity, sir. I have 3 questions. Firstly, the collection efficiency of about 91% by value and 95% by volume. Could you give us some color on state-wise trends, specifically which are the states that are lagging, both in terms of customers not paying as well as by value?
We can see on that, if you see the state-wise in our West Bengal is the highest portfolio. The portfolio was the amount-wise the collection efficiency has come in October 90% in West Bengal, but Pan India has come 91%. But if I come to this, the customer point of view, how many customers are paid, and the percentage-wise, Pan India is a 95% customer have been paid, but West Bengal has a paid 96%. So this is in one side. And if you have the trend on that, we are finding it on that, the very good trend, the 1 to 2% in a monthly is improving on that, the collection efficiency. That has been very good. I hope that we can be reached in the next quarter is a very good amount of collection efficiency, which is near to the before COVID.
And just to add, last quarter also we had mentioned that one big factor which can dramatically change the collection efficiency is running of the train in a business as usual scenario. Today the train services are not running the way we would have liked. Once we see these train services running, whether it takes 15 days or a month, we see a close to 5% increase in our collection efficiency on the overall basis. So that's what will be a big factor or a delta to move the collection.
And this is the train, whatever we are talking on that, the more is a local train, which in the small and period, they can be like to come to the nearest city to sell their product on that. The demand is there, but not available on that, the local train.
Great. Thank you very much for this color, sir. Can you share the similar figure for Assam, both the collection efficiency and the percentage of customers paying?
Yes, we are seeing that a very good performance has come to the Assam also. Is in amount wise, it has been that October has come 87%, and the collection efficiency and the customer point 88%, and the customer also. And we also see that a very good trend we are looking at, and this is we are always mentioned in the many times, I can be again repeat on that, the last 20 years, my experience, the customer behavior, customer discipline, and sometimes it breaks, and again they are returning back after a couple of weeks or a couple of months, depend on that, what types of situation they face on that. So we see that now the bigger crisis is coming because of the COVID, and also in flood or tornado, that many things happen. But after that also the movement we are seeing that the customer is come to regularize on this the repayment rate. That can be big hope, and we are aligned with the earlier my experience on that.
Great. My second question, sir, is on the EEB disbursement this quarter of about 10,000 odd crore. What portion of that would be to your existing borrowers in the form of either an emergency loan or a top-up loan?
See, just to clarify, we have not given any government guarantee loan, so to speak, right? Yes, we have changed our model from being a single loan policy, and now we are allowing a top-up loan. But if you look at the number of new loans that we have given this quarter, that number stands at 21,47,261 loans, right? And this, if we compare it with the previous year same quarter, this was 21,27,817 loans, right? So it's in line with what we used to disburse in this time of the year. The only difference now is earlier we used to have a one loan policy where the customer used to close the earlier loan and take the fresh loan. Now we are allowing them to take a top-up loan. They need not close the old loan.
Okay, got it. So this quarter, about 21 lakh has been the new loans, and the balance loans have actually been to existing borrowers, either in the form of a top-up loan or borrowers have completed their loan and taken a fresh loan.
Yes, so 21 lakhs is the overall loan, which includes new loans, top-up loans, everything, including the borrowers who have closed the loan and taken a fresh loan. In terms of percentage, the percentage of top-up loan today stands at 7.6% of the total EEB book.
Okay, got it. And my last question, sir, is our total standard asset provisioning on the micro book, which stands at about 356 odd crore today, works out to about 0.75% of our loans. Now, even given that in October, the collection efficiency is 91%, even if it continues to improve, do you think that the standard asset provisioning that we have is sufficient? Or why have we not chosen to have a higher standard asset provisioning upfront and write back in subsequent quarters if the collection efficiency turns out to be much better?
See, there is always two thoughts, right? One will say that we take excess, which we have always, in fact, we believe in upfronting the right provisions, but upfront it. So that's the policy we always believe in. We initially, when the pandemic hit, we had estimated a credit cost of 3.5% for the pandemic. So we are continuing to hold that guidance, though we are seeing a better than expected collection ratios, right? At a bank level, we are already 93%. More importantly, at a customer level, we've already reached 96%, right? So if 96% of the customers who have started paying to us, if they continue to pay, then we are there as per our original guidance. We don't need to take any more provision. So we clearly believe that things have improved, and they have improved better than our expectation in terms of timing. And so for now, we wish to continue. And if things continue to move this way, maybe there could be an option of, in Q4 to see whether we need that entire 3.5% or not.
Got it. Excellent. This is very useful, sir. Thank you very much, and wish you and your team all the very best for the following quarter. Thank you.
Thank you.
Thank you.
Thank you. The next question is from the line of Kunal Shah from ICICI Securities. Please go ahead.
Yeah. Sorry, coming back to this question of adequacy of provisioning and 3.5% credit cost. So 3.5 is of the overall book, not the MFI is what we were looking at in terms of the credit cost. Because when we look at the contingency buffer, when we look as a proportion of MFI, that is still at around about 4%.
Right. So what we are saying is the total pandemic cost. We are not saying this financial year cost. So part of it we have already booked in the last financial year. So 3.5% is what we estimated as the total credit cost because of pandemic for all products put together. Against that, we have already provided 2.8% for now. And as we said that our collection efficiency have improved better than our expectation that what we had earlier envisaged. So for now, we are continuing with that guidance and we will, and as Mr. Ghosh mentioned in his opening remarks, in next 90 days, we expect to go back to the pre-COVID level collection efficiency level.
Sure. And secondly, in terms of the top-up loans, you mentioned 7.6% of the book. But in terms of the customer base, how much would that be in terms of the number of customers whom we would have given the top-up loans? Because that quantum would be still lower than the outstanding. So if I were to just look at it in terms of the number of customers.
In terms of number of customers,
so proportion of customers to whom we would have given top-up loans.
Yes, so that is about 12.3%.
Okay, 12.3%. Okay. And if we have to look at it in terms of any sort of lower interest rates are customers seeking, or they are maybe whatever is the EMI is getting added or pushed back, they are still willing to continue with the existing interest rates.
We are continuing the existing interest rate.
Okay, so there is no change in terms of the interest at all. Maybe with this 6 months or what they would be further seeking an extension as such.
No, I didn't get this question. Could you please repeat, Kunal?
No, so I'm saying maybe since the interest rates are on the higher side, okay, and the accumulation really hits them. So our customers, maybe when we are going in for the collections of and when we are resetting the entire EMI, are the customers seeking for the lower interest rate, or it continues at the way wherein the tenor was contracted for, maybe, or the rates that were contracted for?
So in EEB business, which is the erstwhile microfinance, we never compound the interest, right? So we have never charged interest on interest. So the question of reset the interest rate does not arise, or the EMI does not arise. And even otherwise, we are the lowest cost lender. So we have not heard a single instance in the field where they are pushing for interest rates or any change.
Sure. So it's a mere extension with the same EMI.
Same EMI we are collecting on that.
Sure. And one last question in terms of the addition to employees. So they were like 4,000 odd during the quarter. No doubt, Mr. Ghosh also articulated that we are building up the human capacity. But the way in terms of the branches we have added on the employee side, are we more or less done, or that will also continue at such a huge pace? And finally, in terms of this addition, what is the kind of impact it can have on cost to income?
If you see that there is two things in here. One thing on that, we are going to open 574 new branches. So when are opening on that, before the opening, we'll be like to recruit the people and given that to the branch, existing branch to build up their skill and understand the culture and the working environment, everything on that. When they are fitting on that, a new branch will open, they will be transferred from this branch to that branch. Then automatically it will be absorbed by the new branches. So this is the way we are making on that. It will be not the matter on that cost of the ratio.
Okay, so on employees it's more or less done. Branches will be over the quarters.
Yeah. And whatever the number is needed on that in the gap, because we cannot be like to open all branches stopping at a time. Whatever we have been opening for the time being to collect the money from the splitted group. So there is a need on that. The extra staff support is needed. Some staff is going to the COVID affected. We can give the staff to there. So this is a different situation. We can give the staff support to them. And gradually, when the new branch will open, will be transferred on that extra staff from that.
Sure. And one last question in terms of the second half growth. Normally, what we see over last 2-3 years, are we confident of maintaining that, given that we have invested in the franchise, collection efficiency is great? So should we get back to that kind of maybe quarter-on-quarter growth which we see every year in the last 2 quarters?
Yes, will be, because you know that always in the last 2 quarters is business growth is coming better than first 2 quarters, and it will be happened after Puja, and Puja is showing very good the performance. So that I have been very hope on that. The next 2 quarter business also will come on that in a good way.
Okay. Thanks a lot, sir, and all the best. Yeah.
Thank you.
Thank you. The next question is from the line of Nitin Agarwal from Motilal Oswal. Please go ahead.
Yeah, congratulations on good results. I have 2 questions. First is that what are the key criteria that we follow while extending our top-up loan, and how does this differ versus the earlier practice? And secondly, just more about clarification.
It's not properly audible, sir. Yeah, we are not listen good to you. Can you
Nitin, actually your voice is breaking a bit. Nitin,
Sorry.
your voice is breaking.
Am I audible now?
No, sir, it's not very clear. It's not very clear, sir. Can you please check on your phone line and join again?
Yeah, is it any better now, or else I'll join you again?
Yes, go ahead.
Oh yeah, thanks. So first question is like, what are the key criteria that we follow while extending our top-up loans, and how does this differ versus the earlier practice? And secondly, more of a clarification, have we seen any change in MFI business operations due to ongoing state elections in Bihar? I'm asking this because next year we will have elections in West Bengal as well. So just some color on this.
So to your first question on how we assess a top-up loan, as I said, it's just a facility that we have offered to our customer, which is already prevalent in the industry. Bandhan was the only exception. And the reason we started it during this time, because we thought it's a good time to start where we don't need to put more pressure on the customer to repay the entire amount to take the fresh loan. And 2, we saw that competition used to take advantage of our policy of one loan, and they used to give top-up on our behalf. So these are the 2 primary reasons why we started it. In terms of the assessment, it is in the same line as if we were to give them a fresh loan, because this is in lieu of a fresh loan. So all those assessment that is required to give a customer a fresh loan is done for the purpose of top-up loan as well. The conditions like the customer has to be regular, he should not have missed a single installment, the credit repayment capacity, overall indebtedness. So all those criteria are still considered at the time of top-up loan.
Okay. And secondly, on Bihar state elections, any change in operations that you see because of that?
One state where we have seen an improvement in collection efficiency higher than the national average. So in fact, post the floods, Bihar state has really come up very well. And in terms of number of customers, almost 99% of the customers have started paying their installment in Bihar. And in value terms, it has touched 97%.
Okay, great.
We don't see a challenge there. And these are October numbers, which is the election fever.
Right, of course. Yeah. Thanks so much. That helps.
Thank you.
Thank you.
Thank you. The next question is from the line of Arjun Bhatia from Akrana Advisors LLP. Please go ahead.
Yeah, hi. Thanks for the opportunity. For your micro book, what percentage of disbursements would be to existing customers for pre-closure of loans? And directionally, how has this pre-closure rate moved?
So, we never give loans to pre-close the loan. In fact, our policy is the customer has to close the loan first, and there is a cool-off period of 2 days, and after that we give a fresh loan. So it is never the other way around where we give the first loan and then they close the earlier loan. It is never that way.
Right. No, that's what I meant. So after that cooling off period, but what would be that number?
So typically, if you see, we keep adding 15 to 18% new customer every year. But since it's a 1-year loan, the entire loan gets recycled in 1 year. So about 80% of the customer loan goes to the existing customer in a year's time.
Okay. And just on this new strategy of growing the commercial banking or MSME piece, so one, where do you feel the need for this? Is this more because you feel maybe NFI is reaching some saturation level or some ceiling level and you want to branch out into other areas, or post-COVID?
No, this is in line with our strategy that we have always spoken about, right? We always said that we want to move our high vintage micro banking customers to an MSME segment and migrate them to the next level, right? So that is exactly what we are doing. Once we give an individual loan to these customers, the next stage is to migrate them to MSME. The idea was twofold. One, these are vintage customers. Their business have grown beyond micro banking. These are the customers who've been with us for 10 years. Why, lose this business to competition? And in fact, we can be a sole banker, which will not only give us the entire business, but also a better control on credit and their leverage position.
Right. Okay, so why?
And gradually also we are strengthening to assess the risk of the customer, because we cannot be like to continuously in the group loan with their group process system on that. So when this customer is coming as a big and they are also has a need in a bigger support, they are going to the multiple of the lenders to take the loan, and I am not assessing properly on that. So better on that we can be process the assessment of the risk of this customer, and accordingly we provide on that. And that is a big opportunities for us to growth of the business and also mitigate the risk of the business.
Right. So one is growing with your existing customers, and but I think another part of the strategy would also be to acquire new MSME customers, because historically you see on a very top-down level, business growth, income growth, or job growth in India has not been very, very strong. So I guess another part of the strategy would be to acquire new customers. So on that part, what sort of advantages do you think Bandhan has, especially outside of your core stronghold of Northeast, to really grow this MSME piece versus other lenders in this space?
Our presence has moved beyond East India almost 10 years back, right? And our strength is our deep distribution, right? Which is where we believe that we have the opportunity to pick and choose customers. There is enough opportunity in rural India today for the MSME segment to pick and choose those customers. The key is to build a right process and system, which is what we have done over the last 2 years when we were building this individual loan. These individual loans today, even in the COVID environment, our collection efficiency is at 99% level. So that gives us the confidence that we can replicate this system and processes across India and tap this opportunity.
Right. Thank you so much. Wish you all the best.
Thank you.
Thank you, ladies and gentlemen. In order to ensure that the management will be able to address questions from all participants, we would request you to limit your question to 2 at a time. Should you have a follow-up question, please rejoin the queue. Thank you. The next question is from the line of Saurabh Kumar from JP Morgan. Please go ahead.
Sir, 2 questions. One is this interest on interest, the Reserve Bank waiver, is it allowed for your microfinance customers?
So that clarification I wanted. And what is the amount right now? And the second is on slide 25, where you outline your 5-year loan book mix. I just want to know what it does to your return on assets. So clearly, as the microbanking mix comes down, would it be fair to assume that your ROA also kind of compresses down? Thank you.
If you see that the ROA part I mentioned from the microcredit life and today, microcredit life also we are charged on that the 24% or 22.4%. Now we are charging 17.95%. Till now, my ROA is in very good way maintained on that. That is in 3.5 to 4% on that. So we see that when the bank has been like to growing more, their efficiency of the employees has been increased, and customer the growth has been coming on that. That have been helped to the bank to get that the good ROA on that. So will be, and also the NPA is minimized on that. So we feel that whatever the new vertical we are going to expand in next 5 years, we are keeping this mind on that. We all this type of issue will be aligned on that way, and accordingly we are making on that. Because you see that the one kind of the banking service is in very corporate. So that is the total that is coming, and that is the very, very, very low ROA on that. But if you see that the bottom of the pyramid is the microcredit and little bit higher level, which is not in the corporate, mid corporate, is in like the small corporate. Is all together. If you see that is a big opportunities on that to grow the bank and to maintain of this ratio. I feel that it can be possible.
Okay, sir. Thank you. And the interest on interest part, Sunil or Hiren, what is the total amount, and is the waiver allowed?
So firstly, interest on interest benefit is applicable to all customers. So that has been very clearly clarified by the government.
Okay.
Not only to the, even we have to offer this benefit to customers where we are not compounding. Right? So even if the customer is not charged compounded interest, we still have to offer them this benefit. That's what the RBI circular and the FAQ clarify. Right? So it is applicable to all, across all segments, and it will be applicable to 99% of our customer base, which is less than 2 crores. And in terms of quantum, we are still working on the exact amount. But we believe at a bank level that quantum will be around 150 odd crores.
Thank you.
Thank you.
Thank you. The next question is from the line of Sameer Bhise from JM Financial. Please go ahead.
Yeah, hi. Thanks for the opportunity. Just wanted to ask, what is the size of the individual microloan book? I think it was around 22 billion last quarter. Basically customers with larger vintage.
So not all customers with larger vintage have been moved to individual loan today. And this size, I'll get that number, but should be in that range of 3,000 crores. I'll give you the exact number.
Okay. And secondly, what was the write-off amount for the quarter in the microloan book?
109.21 crores.
Okay. Thanks a lot and all the best. Thank you.
Thank you. Thank you.
Thank you. The next question is from the line of Nishan Shah from Macquarie. Please go ahead.
Yeah, hi. I have like 3 or 4 questions. So firstly, could you explain the difference between the erstwhile small enterprise loans, SEL, which you used to classify, between that and the microfinance individual that you're now showing as a part of the EEB book, and the TDOD book which you are now showing under retail? What is the characteristic difference between these 3 portfolios, either in terms of like ticket size or type of customer or something?
The first point on that, you see that whatever the SCL, we called it in the vertical under the commercial banking, and these all customers are coming from the market, not in a microcredit promoted customer. And under the EEB and whatever that the customer we are talking about, the individual loan, that is only the customers who are promoted from the group loan to the individual loan. And ticket size, if you see that the microcredit ticket size is a disbursement point of view 1.65, 1.75 lakhs. And if I coming to this, the SCL, that is in 3.5 lakhs.
Okay, perfect. Second question on just the kind of diversification that you're talking about. In the south or in west or some of these relatively newer geographies that you're planning to enter, sort of have like a last mover kind of a disadvantage in terms of you're going to be competing against well-entrenched players. So what does that do to your cost to income, to your credit cost outlook for the microfinance pool? Because all the advantages that we had in the core geographies, we will probably have those disadvantages heading into some of the newer geographies. So could you talk about that a little bit?
There is no geography where we are new. Actually, we have the presence, but presence is not that much big like in Bengal or Assam or like on that. So we are like to open the branches more in that areas. And we have a good plan earlier so that we are gradually increasing the capacity of the people in that branch, those branches. When it will be open, so those are the old branch staff will be transferred to the new branch and the new staff will be joined in there. So that can be helped to maintain the cost to income ratio or cost of operation ratio in the bank on that. So we are practicing such a way where it cannot be like to big jump of the cost of operation will become on the bank.
Okay, and just one last data keeping question. Could you quantify what is the 0-day PAR in Assam for this quarter and the last couple of quarters, please?
Our collection efficiency in terms of for Assam particular state we will have to come back to you, but overall our 7 plus has been in the range of around 20-23%.
22-23%. Okay.
Yes.
And so do you expect some bit of problems to occur over here, because the industry data seems to suggest that all these overdue accounts are progressively moving towards the 180-day plus kind of overdue buckets and are likely to be written off. So what are the kind of write-offs that you've done in Assam so far, and what do you expect to do in the future?
See, as we mentioned earlier, our collection efficiency in Assam has reached 87%, and about 88-89% of the customers have started repaying. So we see a month-on-month improvement in Assam, and we don't see any reason to be panicking so much about Assam. Yes, it is below the national average, and there are reasons to be below the national average, because this is one state which had a CAA impact. It was coming out from the CAA impact, and then immediately there was a big flood which hit the state of Assam. This is also one of the states along with Bengal where the lockdown was extended till the last possible day. Even the first 15 days of September, there were pockets which were under lockdown. So clearly we are seeing a month-on-month improvement, and we don't see things going out of hand here.
My experience also see that in this type of borrowers, they are once upon a time they are very big. The regularize their portfolio. That time if some crisis has come, they will take some time on that. but I saw that the maximum number of borrowers return back, and sometimes maybe the 3 months take the time, or someone will be the 6 months take the time. So that is the one point which I learned from my past experience of the microcredit borrower. And this is the people, if you keep in mind on that, they are not to get the access of credit other than this the lenders. So that it is then very keen. They will be like to return back to again to start their business or running their business, go to the money lenders to take the loan for 100% interest rate. So they know that matter, but there will be some crisis has come that they will be take some time, but gradually they are returning back, and they are returning back very earlier compared to the other industry. So that is my confidence on this borrower. I honor this borrower on that.
Okay, perhaps we can continue this offline. That's it from me.
Okay, thank you.
Thank you. The next question is from the line of Anand Dama from MK Global. Please go ahead.
Yeah, thank you for the opportunity, sir. So the collection efficiency that we have seen in the month of September and now in the month of October, there is hardly any improvement. I mean, just about 1% that we have seen in the whole month. So why is that so slow? Despite we had much of business normalization happening in the month of October.
So just to correct, the improvement is 2 percentage point and not 1. And there are two factors here. One is, in the month of October and September, we had Puja holidays as well. That impacts. And two, as we mentioned at the beginning of the call, that the one big factor which can impact the collection efficiency in a big way is starting of trains. So the day we see the train services functioning in a business as usual scenario, we see a big jump in the collection efficiency. Because there are a lot of businesses which are dependent in and around the movement of trains, either for their supply chain or their businesses are in and around their trains related to the functioning of trains.
So when do you expect that to happen? I mean, when will starting?
So this will be depend on government. No, we cannot be like to take that decision.
Would have happened, or some sense that would have.
We are earlier expected in October before Puja they can be open, but they are a little bit scared about it. Maybe the Puja or Diwali, it will be more people will be gathered, so that they have not opened as per my knowledge. So hope we can be after the Diwali, maybe they can be observed and then can be open on that.
We will see some more improvement happening in the month of November, hopefully. And by the end of November and turning into December, I think is when we will have to recognize these accounts in an NPA, which we are not able to collect, right? So roughly about as of now, Hello?
I am coming on that point on this.
Yeah.
We cannot be expecting the overnight everything will be changed. And coming to this 5% or 7%, no. Because in the beginning, if you see that the September, when the COVID unlock in the beginning of the June, and 69% collection efficiency has come on that. And that is a very fast growth has come. The second quarter it has come to the 92%. The next part, whichever another 8% or 7%, it will be little bit not in that the fast will become on that. Because it will be also depend on some circumstances of the area on that, in that train, and city to state to state, there is no transport is making on that. If you see that the Bengal is a hub of that. Some of the small entrepreneurs, they are produce a lot of garments items and selling to the Calcutta and Assam, Tripura, and Bihar, Odisha. People will come to buy in a bulk and selling to their states. They are not also coming on that. So a lot of circumstances will be depend on that. So I feel that that will be not coming to this jump on that to 98%. I expect on that the next 90 days it will become as a very near to COVID situation, before COVID situation on that.
See, what is also important to note here is that 95-96% of the borrowers have started repaying, right? And as Mr. Ghosh initially mentioned, that it's a discipline-based credit. The fact that they have shown that credit culture to come ahead and pay, we are confident that as these customers have already been activated, we would be able to recover this 95-96%. Right? And things, so the better way to look at is how many customers are paying.
Right. So basically, customer number is more important, and you believe that the part payment customers also would come up in the month of November.
That is showing their interest to repay the money.
Okay. Sure. And sir, the number of banking outlets that you said that you want to open in the Southern India, Northern India, and other stuff. So these are the full-fledged branches that you will have, or it will be a smaller version of the branches that you will have, which will largely collect the liabilities and distribute some assets.
It is a mixed on both. Some of the micro banking, which is called the banking unit, and some of the bank branch. Because every 3 to 4 bank branch will be like to 3 to 4 microcredit branch will need to 1 bank branch. So accordingly, it has been proportionate on that.
And just to add, if you at the last 3 years track, we've been adding our distribution about 10 to 12% every year. So this is in line with that same strategy. Right? We've been able to manage our costs despite adding those distribution every year on year 10-15%. So we don't see any reason why this year should be different.
So how many branches that would be opening up, and which are the full-fledged branches?
So about 100 out of these will be the full-fledged branches, and the rest will be the small branches or the micro banking unit or the EEB branches. Okay.
And now, in terms of approvals from RBI, is there any restriction or that is largely gone?
All restriction withdrawn by RBI.
Okay, that has been withdrawn. Okay. And so is on your compensation as well, right?
Yes.
Okay. Sure. Thanks a lot, sir.
Thank you.
Thank you. We would request participants to limit your questions to 2 at a time. The next question is from the line of Akriti Kakkar from Goldman Sachs. Please go ahead.
Yeah. Hi. Thanks. Good evening, everyone. This is Rahul here. Sunil, just to start with, I've actually got a couple of questions, so we'll keep it quick. So can you just tell us the average ticket size of the top-up loans that we are giving the last 2 quarters or so?
35,000 average.
Okay, sir. And this is lower than the normal average disbursal that we do in a quarter typically, which is about 50 to 60,000 rupees.
Yes.
Got it. So the other question was, so since 95% of the customers, are paying versus in terms of value, it is 91. Does it indicate that some customers are making part payments? Let's say if they have got 500 rupees of installment due in a week, they are paying about 200 rupees, 300 rupees, whatever they are able to, or it is that 95% customers are making full payment, which equates to 91% in terms of value.
No, there is a part payment element here.
70% of the customer are paying full.
Okay. Yeah, so basically the customer behavior is definitely there, just that as their purchasing or whatever income improves, they actually will that was the reason I was asking. The other question was with regards to restructuring. So do you have any thoughts what category of loans could restructure and what the amount could be? Any rough sense? Even though I appreciate the point about the cost of risk or the provisioning that you've already taken, but just wanted to understand on this restructuring angle. Would you be doing any, or will microfinance customers be eligible for micro customers? I mean, I was curious why you've changed the name, but yeah. Then.
We have changed the name because under this the EEB will be like to going to this because people micro banking means people feel that it is a group loan. So actually, loan, so that there is also deposit. We are developing on that branch. So that is we can say that is a combo branch like on that. They will be catered low income and medium income level customers who are taken microcredit loan or not taken microcredit loan. They can be like to get the banking service from this unit. For that reason, we are mentioning it is a emerging entrepreneurs, the banking unit of that banking vertical. So this is the objective.
Very useful, sir. But any thoughts around restructuring, sir? How would you think about it?
Restructuring, to be honest, we are not too very keen on restructuring per se. The way we look at restructuring is a customer who is paying needs couple of months more to close the loan more than the scheduled closure date. It's limited to that, not beyond that. And as far as current date goes, we have hardly received. We can count those requests of restructuring, maybe less than 10.
Okay, so just to paraphrase, so you're saying no major restructuring in emerging entrepreneur group, and so far in other segments you have not received any restructuring requests, particularly SMEs and NBFCs, etc. Okay, just one final question, or actually second last question. Cost of deposits, Sunil, how are you thinking about it? Because your TD rates are now below 6. The savings deposit rates are, I think, 3.5 and 6. But the overall is still above 6.2%. So would we see the changes reflect in the subsequent quarters from now on, or how are you thinking about it?
Yes, we will see the change. We had changed the saving bank rates from 4% to 3%, the minimum rate.
Yeah.
In mid of September. Right. So
okay.
The full benefit of that, the annualized impact will come only in the next quarter. The full annualized impact. Secondly, the term deposit rate for it to get repriced will take about a quarter or two more. But between last 6 months, we have reduced the term deposit rate by almost 150 basis points.
Wow. Okay. And just one more small one. Can you share the breakup between the customers in savings deposits who has less than 1 lakh and more than 1 lakh deposits?
So about 63% of the customers value-wise is more than 1 lakh. I mean the saving bank deposits, not the customer.
Yeah, got it. Just one, got it. Sorry.
Yes, that's how it is.
Got it. Just one final question, Sunil. Was the fee income number, the overall fee income this quarter that you have booked?
10.7
amount. Just a second. My total fee income for the month is 382 crores.
Got it. Thanks a lot, and wish you good luck for these subsequent.
Thanks.
Thank you. The next question is from the line of Rohan Advant from Multi-Act Equity Consultancy. Please go ahead.
Yeah, sir, thanks for the opportunity. Just one question. Firstly, on this, you said 7 DPD is 23%. Can you clarify that, sir?
See, the way DPD calculation works, right? The moratorium got over on 31st of August, right? So let's say on first week of September, only 50% of the customer paid, or only 60% or 70% of the customer paid. Immediately 30% of the customers will go on DPD. Right? So that's not, in current scenario, I don't think that's the right way to look at. But since there was a question, we have responded to it. Because clearly in a scenario where the collections are picking up, the DPD will be higher. Because some customers will pay part, some customers have paid full, some started after 2 weeks. So immediately the first week, the entire amount will look like DPD.
Got it. Got it. And sir, you said 76% of our borrowers are paying full EMIs, and the balance, which would be 19%, would be paying partly. Is that correct?
So that was a September number. October number would be much higher. I think it will be above 80% for the full EMI. We will, the October just got over, so we still have to work that number.
Okay. Sir, and collection efficiency that we are reporting, is it from 1st to 27 total, and would it be very different, say, end of October versus beginning of October? That's the last question. Thank you.
No, this is the cumulative collection efficiency, and there won't be much difference between first and... surely it will improve between the first week of October and the last week, because continuously more and more customers are coming up. But the point I'm trying to make is it's the average for the full month.
Okay, got it. Thank you.
Thank you.
Thank you. The next question is from the line of Jay Mundra from BNK Securities. Please go ahead.
Yeah, hi sir. Good evening and thanks for the opportunity. Sir, most of the questions have been answered. Just two questions. If you can give the AUM breakup for West Bengal, Assam, Bihar, and maybe Maharashtra for MFI book.
So Bengal will be about 47%. For Assam will be close to 17%, 16 point something. Bihar, just a second. Bihar is close to 9%. And the fourth state you said was Maharashtra.
Right, sir.
5% nearly.
Sure, sir. So thank you.
Less than 3%.
Less than 3%.
Okay. And second question is, sir, on commercial banking. So just to understand this, because this is a very wide spectrum, it is catered by PSU bank, regional banks, and even large banks, as well as NBFC, and maybe probably fintech also. So what is your thought process here? Who would you be competing with? Would it be like NBFC customer or PSU bank customer or private bank customer? Any broad thought process here? At the same time, this team, would it be like external team or how are you thinking on this team and who would be heading this? Thank you.
We have the commercial banking head. He is working with us in the more or less in the 3 years, and he is adding on that. This is one. And we are not recruiting in the new person. He is a very good capable on that.
So the earlier wholesale banking is now the commercial bank.
Same vertical. We have been changed the name because wholesale people feel that is a corporate lending, so that we are not. We have been changed the name on that. And the next point on that is a big vertical in the is called the SCL, Small Enterprise Loan. It has been developed in the 4-5 years before. And that is a good amount of the portfolio in here, which is a ticket size of 3.5 lakhs of the disbursement basis. And this is in one vertical, and it is individually assessed and digitally also taken the decision on that. And this is in one. And second is in also under this vertical, there is a small SME portfolio also in here, which is in not more than 50 crores is like on that. And major is then that 10 lakhs to 1 crore to 5 crores is like on that. And we have the separate vertical and credit underwriting people who are assessing on that. And third is there, we are some portion of that, the lending to the microfinance institution. So that is also under this, the commercial lending on that.
Sure, sir. And any thought process, these customer profile, would it be like us? I mean, as of now, these customers would be from your competition in this segment would be from PSU, NBFC, private banks. Yeah.
So there are two broad verticals here under SME. One is the average ticket size of 2 crores, where we compete with NBFC and banks. And one is the lower ticket size, where we have the average ticket size of almost in the SCL vertical, which is part of the commercial banking. There, the average ticket size is 3.5 lakhs. Then there are smaller SMEs where the average ticket size is 30 lakhs. All right. So broadly, these are the three sub-segments in the commercial banking.
Sure. Thank you, sir. Thank you so much.
Thank you.
Thank you. Ladies and gentlemen, due to time constraints, that was the last question. I now hand the conference over to Mr. Sunil Samdani for closing comments.
Thank you, ladies and gentlemen, for your time and patient hearing. Look forward for your continuous support. Thank you.
Thank you.
Thank you. On behalf of Bandhan Bank Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your line.